Boom shalakalaka. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning, everyone. Welcome to the Forex.Today YouTube channel. Thank you for subscribing. Thank you for liking. Thank you for commenting. If you want my chart templates, it's in the description below. You can download them for free. So now you got these templates. You got to stuff them into an MT4 account. So therefore, go to tradersway.com. They're making this event happen. Thank you, Tradersway. So visit tradersway.com, open an account, demo or live is fine. Go in the back office, download MT4, pop in my chart templates. You're golden. Your charts look like these. So good morning, nice to see you. My name is Wayne McDonald. I am the Chief FX Market Strategist for Tradersway. My goal is to help you become a confident, skilled, happy trader. And so I'm going to need your help. We need to work together on this goal. I'm going to push you in the right direction, pull you in the right direction, carrot or stick, but you still need to put in the blood, sweat, and tears for years. Pound pairs, all that kind of stuff. Yeah, maybe. So please get involved. Please like, please subscribe, all that kind of stuff. And hey, why don't you bring a friend next time, huh? So we're going to cover technical analysis, fundamental analysis, dollar pairs, yen pairs, gold and oil. That's pretty much it. We'll just get in, get out, get her done kind of thing. Anything else? The whole Bank of England thing was canceled. That's weird, right? So who knows what will happen with the pound. So without further ado, let's just jump into it. Let's go. Boom! Barry, been streaming exactly 3 minutes. Okay. No, gotta eat. Gotta do breakfast too. All right, so we'll start here. What am I looking at? Swissies, all right. Is it okay we can start with Swissies? Ryan does that at FX Bootcamp Live. Oscar. I do weekly swings. All right. So rumor has it Australia is going to cut interest rates. Whoa. That is so good. Nothing like drinking vegetables, huh? All right, so yeah. So anyways, Australia might cut interest rates. They're actually boldly talking about it again. Very cool. How does it affect us? Well, technically it doesn't, right? So we'll do some technical analysis here. Bleep, bleep. Okay. So we started this trend long ago. Up, 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 down, down, sell. Well, that's not technical analysis per se. That's price action. Okay. Down, 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 down. I wish I could go back and forth more quickly. Okay, new sell zone. Okay, so that's price action. The technical analysis is saying, you know, this is resistance in here. So there's a couple of things going on. Both say sell. Turn up the mic. Really. Hang on, I'm trying to. There we go. Here comes the drums. Is that better? Here comes the drums. So sometimes when I turn up the mic, it gets all fuzzy, but anyways. All right. Everybody happy? Great, thank you. I'm super happy that you're happy. Okay. All right, so up, 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 roll over, right? You can see this still comes into play. Up, up, up. The technical analysis part, you know, and I'm separating TA from PA. Okay, so there's two things going on here. The way I'm describing it anyways, there's two things going on here. Hits the moving averages, down, 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 down. Now, price action would indicate that somewhere in the future this is going to be a sell. Okay, now the bigger technical analysis, and let's do this in a slightly different color now, just because it can. The whole plan for the month of May. Okay, this is technical analysis in the form of swing trading. That predicts this. And we're here. Okay, rides the 21, hits the exact bottom, and stops. Okay? So now we get this interesting thing, and this is something that you should have been thinking about Friday, something that we do in the swing trading group, is talking about like, well, if you're a bull, you need to thread together a reversal pattern. You can't trade a bullish market you can't trade a bearish market as a bull unless you have a reversal plan. Barry says, love the video yesterday, Wayne. Best webinar this month. Really? Honestly, I don't remember a minute of it. What? It sounds really good, Barry. What did we talk about? Economics. Oh, sweet. That sounds like something I'd talk about. Yeah, it's funny. I couldn't tell you anything. I have no idea whatsoever. But I should probably go back and say, do more of that. All right? Pharaoh demands it. Cool. So you cannot, if you're a bull, you cannot trade a bearish market unless it reverses. Now, let's add to that, because that might blow some people's minds right off the bat, right? But on top of that, the reversal pattern must be at key levels of support. In this case, if we're talking about bearish going bullish. It can't just be a reversal pattern hanging out in no man's land or on some wimpy little trivial pivot or something. It's got to be, as I've described before, support a blind man can see. That's pretty obvious because he's blind. And I'm saying if he can't see it, nobody can see it. So, wow, that's really obvious. Okay? Cool. So how about here? Because that was the projected bottom for the month of May. Now we're at May, and we hit within the exact pip of this bottom, and we get a big chunky reverse. Cool. So is that a trade opportunity? No. We're just looking for a reversal pattern on that exact price. So we got the left leg of a double bottom, let's say. Has that happened yet? No, but it might happen in the next day. Do you understand? Hey, don't worry about it, Barry. I know what you meant. Okay, so what about this? Could you buy it in there? Yeah, that's the beginning of a double bottom, right? So what are you planning out? If you're planning it, you're thinking dup 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 dup, right? That's the plan. Double bottom. But remember, it's not just a double bottom. It's a double bottom at the exact price we expected back like April 28th. Like, I have to re-emphasize that. If you were a bear in this area, I have to do this in a different color or different tool, or in this area, okay, if you were a bear back here, we talked about this dropping from this price to there. That's the moneymaker, guys. Not the double bottom, not the angle and separation of the moving averages, not your, if you switch from a MACD to a stochastics to an RSI to a CCI, and then finally you're like, aha, it's the CCI. No, it's not, bro. It's the fact that this was planned out weeks ago, that if you were a bear, first of all, there's the entry, but that this was likely, according to our analysis, this zone here was likely going to be the bottom for the month of May. That's the moneymaker, not all this other noise. That was the general assumption a bear had way back in April, and that if we got down to this point in May as a bear, you'd be filthy stinking rich driving yellow Lamborghinis, and B, that's where you take your profit and get the heck out of the market. That's the moneymaker. So then what does that produce if you're not a bear? Well, you could say, well, this area is where bears are going to get out. Their brokers are going to offset their short positions with long positions, and it'll create at least a temporary Forex vortex of upness for a while. Okay, that's the moneymaker. So you can look for that. Now, somebody earlier said that's aggressive. Yeah, I would agree. Yeah, to smart Robin? Yeah, I would agree, but it's a trade. It's a completely valid trade. Now, the less aggressive version of that includes the double bottom at that exact price. So the next stage of the trade, okay, so let's remark it, is what if it does reverse there and it makes a higher high, it's going to go up to about here. Why? Well, once again, that's technical analysis, that's price action, that's a pivot, there's a role reversal. It'll go to there. You watching? You listening? So therefore, between Thursday and Tuesday, not today, 1 week from now, right? Right? Oh, no, he didn't. Is he talking next week? Oh, yeah. So we're thinking this next week. Now, it might be Thursday. Maybe it heads up Wednesday and then drops Thursday, so you buy it Thursday night or Friday morning or something. Or you buy it Sunday afternoon. I don't know, but this is sort of the plan so that your entries look like this. You either enter X or you enter Y. If you happen to be a bull in a bearish market. Now, do you understand how, right? You understand how, patient and disciplined you have to wait for all this to come together? What's the other, right? What's the other plan that's possible here? Brooke says something about closing a gap. Dude, if it didn't close yesterday, walk away from the gap strategy. Okay? Walk away from the gap strategy. Gap strategy is something that happens in the first 12 hours, usually the first 4 hours. Don't keep hanging on a gap strategy on a Tuesday or a Wednesday. A lot of people do that. Don't. Okay, don't do that. No, Mickey, there's another thing. Oh, hang on. This is super important. Sorry. Sorry, this is super, super, super important. I have to do this. Hang on. Sorry about that. Super hard. So what's the other one? Yeah, keep following, right? And that's why, right? Yeah. So how does a bear handle this? Sell here. Yeah, woo! But you know, it's so funny. And maybe you don't see it in you, and maybe it's not you. But I've been doing this a long time, right? I've been doing webinars like this for 15 years. I've been coaching people for 15 years. I've been mentoring people and going through their trades, and I've hired dozens of people to trade and all this kind of stuff. And it's amazing how much the human mind wants to fight. Now, in this case, it might actually be the right thing, but we focus so much on fighting the obvious. We want to swim upstream so much, it's like we're a salmon. We're like fish, right? It's almost like you should take a fish out of the water, put him on a leather couch and say, lean back and tell me about your childhood. Let's talk about this. Why do you keep swimming up the stream? Why don't you just swim downstream? It's so much easier. Why don't you just relax? Why the aggression, right? Right? We do this. And I used to have stories about standing in front of a freight train, betting that it can stop in time and all this kind of stuff. But it's amazing. Now, this is true. These are very, very key levels for technical analysis. Super ridiculously important. Doesn't mean it's not going to fall further. Now, if you're a bear, this was your selling opportunity, and that's that. It happened, and it happened like at exactly the right time. Like once again, I implore you guys to work your schedules better. If you miss that trade and you're a bear, you're just not doing your job, right? Yeah, yeah. Well, I can laugh at it because there's some sort of human condition. Maybe it's not everybody, but I think it's most people that they see reversals way more than they see trends. I've seen it where people buy and 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 buy in a downtrend. And then as soon as the trend is up, they sell it and 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 sell it. And it's cliche. And I swear to you, I've seen it so many times, it's unbelievable. So it's not your fault, but I would try to recognize, like, this is what we're trying to do is improve, right? And don't they say admitting it is the first step? I would say stopping it is the first step. But anyways, it's a very interesting part of the human condition. Yeah, it is everybody, isn't it? So if you've been trading for 10 or 15 years, in particular, because it may not be you per se, but let's say if you know other traders or know people learning how to trade, it's really, really fascinating how we just constantly bet against the trend. Constantly, right? So anyways, in this case, it's not a bad bet, but we're trying to remove betting. And that's where technical analysis comes in, because your bet, think of it as a strategy. If you say, look, I bet you this goes up from here. Well, if you threw money down, that is a bet. That is a gamble. But you could say, you know, I think it's going to go up from here. And then you say, okay, if that's true, I need to be at hardcore support. Is there hardcore support? And you say, this is hardcore support. Specifically that line. Isn't that amazing? That exact line was the target. So, right? How do you overcome it? Well, first of all, take notes in these lessons. Okay? This is all about trade planning. Okay? And it's my understanding the programmer this week is going to start building the tools I need to give you guiding trading ideas. Right? So anyways, we'll get to that. I think maybe that will help with these things. Okay? But the first part is hardcore support, and then the second thing is a reversal pattern, right? If we were hanging out somewhere else, this wouldn't be that important, okay? But maybe use this as a model, okay? You could see for about a day and a half, this worked. So think about, well, this could happen. So how do you manage the stop? Well, you put the stop just below, right? And then maybe move it when you can. And then what's the second plan? Okay, then you got to do this. Okay. Then you start threading it together. Okay. If you're a bull, but that's a lot of work. Okay. That's a lot of work, but you need to be patient. Okay. That you got to be patient, because the other thing to sort of remind you, let's say, is that no matter how bearish you are, you can't sell it now. If you're so bearish and aggressive, why didn't you get out of bed? That's the part I never understand. People come to me and they're like, well, I'm really aggressively short on this. Well, why were you not aggressive here or here, right? Or even Sunday morning, or sorry, it's Sunday afternoon. Okay, here we go. Okay, right? You should be setting these trade plans up. Okay, if you're aggressively bearish, let's, I guess, do it this way. This was your first price. This was your second price. Okay. Look at this one. Just crazy obvious, huh? Let's see. Down, 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 up, up. Sell the London Open at the monthly pivot after a rejection at the M3. Because remember, your plan this week is M3 to M1, right? If you're a bear. Okay. So I'm like, if you're aggressive, you know, even here is plausible, right? So like, let's say you kicked it off of this monthly, your stop is still up here, and you walked away. So you risked, I don't know how many pips that is, 45 pips. I don't know, it could be 25. But it's like you just can't be, there's no level of aggression here. It's just stupidity. You just don't know what you're doing if you're selling it now. You just don't know what you're doing. And that should be the thing that you recognize, right? So aggressive here, aggressive any one of these, just the only thing that changes is how many pips you're risking. But whether you sold here, or sold here, or sold here, okay? It's all basically at market open, right? This is New Zealand open, so it gapped here. There's your New Zealand open. This is your Tokyo open, or which is now Shanghai open. So there's your so let me clean this up. This is your New Zealand open. This is your Shanghai open. This is your London open. Those are the times that you would expect to be aggressive. These are the prices you would expect to be aggressive. Okay? Specifically this time at that price. Specifically this time at that price. And specifically this time, you might have tried a gap fill strategy. Remember, the gap fill strategy is fill the gap, continue mission. So this one is, well, you could have played it either way, really. Okay? But the thing is, those are your times and prices of aggression, right? Let me ask you this way, right? Like in war, I think when it comes to bravery, right? It's knowing that you're going to go up that hill, you're going to accomplish the mission you've been given, and you're almost certainly going to die. Versus you just foolishly go. You just run, and you just have no idea what you're doing. One is brave, and one is stupid, right? So anyways, selling there is not brave. It's not aggression. Well, it's not, well, yeah, how do you say it? It's not a counter trend or whatever. I mean, it kind of is, right? It's too late for a counter trend. So let's be clear. Okay? The only thing I'm saying here, I'm not saying you should trade it either way. I'm trying to help you look at this, understand its meaning or the meaningfulness of the price and time of where we are so that you can make decisions. Okay? This is a meaningful price going back to about this time frame. Okay? So in this time frame, the swing trading group was talking about it. If you're a bear, you're going to sell the lower high, and there's 100% chance if you hit this price that you will take profit. That's all. That's all it is. So do you buy it here? No, but you could. Do you sell it here? Never, ever, ever in a million years. If you wanted to sell it, you had awesome opportunities over the last 36 hours. So 12 hours ago and 24 hours ago, you could have shorted it. But that would have been the aggressive one, because what does this moving average on the 4-hour tell you? It tells me expect a double bottom. Doesn't mean you have to trade a double bottom, but boy, if it turned double bottom, why wouldn't you not? Why would you not? Why wouldn't you not? You could take a shot. It's called a trade. Okay, doesn't mean you're in love with it. Doesn't mean you're going to get married on the first date, right? It's just a date. Take a shot. You might fall in love. Maybe you don't. You probably won't. Take a shot. Okay, it depends if you're a trader or investor or all that kind of stuff. But another way of looking at it, and I'll say it like a fifth different way, our trade plan back at the end of April was this range. Okay? Okay? Nothing else exists in this universe. Okay? So remember, this month a lot of currency pairs went through their expected ranges, right? Right? And I say I don't know what to do anymore because we did what we expected it to do. It fulfilled its destiny. What happens next? I'm like, I don't know. I'm shaking the crystal ball. There's nothing. There's nothing. This is what was expected to happen. So how do you handle that is another way of kind of asking you to analyze. If you expected the market to do this, oops, that should be in a different color. Okay. If you expected the market to go from here to there and it didn't, what happens next? I don't know. I don't know. We still have a week and a half of this month. I mean, it did what it was supposed to do. What happens next? I don't know. We wait till June. But there's a really interesting question. Should you plan June to be an inside month? Well, let me ask you why. Greg says, are we not supposed to go golfing? You totally can. So now that I've done my first degree, I'm probably going to rejoin the country club. They have nice family dinners there. Kids like hanging out at the pool. You can just go to the bar as a kid. You're like, give me a Coke Zero. Member number. That's it. It goes on the account. Kids love it. And I might actually go golfing again once a month. But anyways, yeah. Should you plan next month? Yeah, well, this month was planned. This month is done. Plan next month. Take the rest off. Yeah, I used to golf once a week, and now I golf once a year. But I've just been busy the last 5 years, right? 5 or 6 years. Right. So majority of currencies have blown through their monthly pivots, which is, yeah, well, first of all, unusual, right? But then going with big perm FX makes an astute observation. Next month's pivots are going to be wide. Okay? So that in of itself makes it very difficult to go even wider. Or let's say it's going to be very difficult to maintain the same range month over month. Now there's another thing with June. I've explained this before. We get to the June Fed meeting and then summer. No, it's a golf club. We have three clubhouses. I wasn't sure if it was 4. 1, 2, 3. We have 3 clubhouses, 3 golf courses, 3 swimming pools, 1 gym. No, sorry. Yeah, it is 4. 4 clubhouses, 4 golf courses, 4 pools. Only 1 gymnasium though. And the tennis courts, and so you can do the tennis and you can do the golf. You know, was it Arnold Palmer or the other guy designed some of the courses? So they're fun courses and all that kind of stuff. But when we used to be members, and I went there to take golf lessons in between trading just to keep myself active. And my coach had golfed against Tiger Woods. He had shot a 59 in a PGA tournament, all that kind of stuff. But I haven't done that in years and years and years and years and years. Who has time for that nonsense? But anyways, yeah, I did this one. Oh, you're asking Brooke. Did Brooke do the swing trading course? Oh, you did the Kiwi Cat, huh? Sweet. So anyways, yeah. So you could take the month off is what we were talking about. I don't know how we got onto that otherwise. So, but looking at this level clear, right? This is what we're looking at now. Here's the range for June. Oh, I know what I want to comment on. Okay, we got this, but here's the issue. You get to about June 15. And then what? You hit the Fed meeting, which is in there somewhere. It's different every year, but it's always around June 15th. And then summer. So I plan my year around this. Yeah, Brooke's a good trader, so. Brooke, because of that course, have you added a lot more swing trading to your repertoire? Like, I know it's not the only thing you do, but is it something that you now, I guess going with the golf analogy, is that a shot you now carry in your bag on a regular basis? Okay, we can do that, Mickey. Yeah, you do a lot? Yeah. It's such a great way to trade. How many people would only swing trade? Like, I mean, swing trading is great. If you have like 1 hour per week, that's all you could trade, right? I mean, how many people would actually try to do that? Where you only work Sunday morning. Well, it depends on where you live, but like for me, Sunday afternoon, right? You could come in and Sunday afternoon between 5 and 6, and you're done for the entire week. I mean, how many people would try to make that in of itself your career? Like if you were retired or if you had a day job or something like that, that's what you need. Oh yeah. But I don't know if you day how are you the day trading lately has been fantastic. But to add swing trading on top of day trading, and then if you have the time to sort of do intraday trading and scalping, but with my grad school and stuff, I've been doing a lot less intraday trading, just day trading and swing trading. Gee whiz, can never get these clean. Terrible. Yeah, that's why what you need is a bag of strategies. You should be able to scalp, spot, swing, and carry. Absolutely. Yeah. Well, and that's a better way of doing it too, though, Brooke. And I've been teaching that for forever, sort of the portfolio style, because the more trades you have, statistically speaking, the less luck you have. It's the rule of large data sets or something. But anyways, if you want to look at it, the larger the sample size, the smaller the standard deviation. Okay, I'm going stats on you now. You could Google that. Okay, so the more trades you have, the less variation between the two. The smaller the standard deviation between all your trades. Unless you're just a horrible, horrible, horrible trader. You might be the world's worst trader. Not you, Brooke, but whoever is thinking about this, right? But if you trade the best you can and you follow rules of engagement and you do lots, the standard deviation between all of those trades gets smaller, which is another way of saying there's less and less luck. And by luck, I mean big wins and big losses. You can have good luck or bad luck. It doesn't matter. I want no luck. Okay? So that's what we want is more trades, smaller lot sizes. So again, for every $100,000 in cash, trade one mini lot. Well, right? If you carried that out, you might be trading nano lots. So anyways, at some point, like we talked before, I want you to grow your account size and lower your per trade risk. Okay. Anyway, so let's do our COT data. This gets tricky because it's hard to see for me. Oops. And the light gets my eyes. See, what I want to do is turn this. I guess I could. So that's easier for me to see, but now you got to look at my halo. I guess I could do it this way. It won't bother you as much. All right. Come on, now touch me, baby. All right, so euro, long positions, flat. Nobody's buying euro. Short positions coming down. Therefore, euro USD went up. Aha! No. What would I do at a trade seminar? Says I wouldn't do it in Atlanta. I'd go somewhere awesome. Right, let's go somewhere fun. Did you notice this, guys? Euro dollar went up. Nobody bought the euro, and lots of people sold it. Or no, less people sold it. Okay, let me try that again because I screwed that up. Euro dollar went up. Nobody bought it, and some people got out of their short. Okay, isn't that interesting? It's people getting out of the short. Oops, clicked the wrong one. It's this move here. People getting out of short positions that made euro dollar rise. Ha! So nobody's buying it, and some of the bears got out. Is it possible that some of those bears get back in? And that's how you kind of use this. Okay? So there's a great example of euro dollar going up and nobody buying it. Okay? And I'll show you. Here's the buyers of euro dollar. No one's bought it since November. These are open positions for futures contracts. Okay? Okay, Jason? These are large institutional speculators that have, this is not opinion, this is cash in the market. Yeah, actually, excellent nachos. Next week I'll be buying peso. Okay. Large speculators in the United States over an exchange. That's why we know the exact number of contracts. Okay, we know the exact number. Now to make this smaller, so it's easier to draw, this is the number of bearish contracts, sellers. Okay, I'm highlighting this now. Week over week over week over week. All of a sudden, sellers are increasing, sellers are increasing, sellers are increasing, sellers are increasing. Okay, sellers are increasing. And notice this time where there's no buyers and increasing sellers, what actually happened to the euro dollar. Okay. So to highlight that, this line is the actual price of the euro dollar. Okay. And to remind you, this is sellers. Sellers going up, right? So you could do it this way. Generally speaking, let's say from this point, I'll just pick a point. From this point, sellers have been increasing and buyers have been flat. What happened to price? Okay. So looking at just now, let's clear that out. Looking at just now, we're only looking at the last 2 weeks, let's say, or 3 weeks. Over the last 3 weeks, less bears, no change in bulls, euro dollar went up. Right here. How about that? Isn't that neat? Yeah, it says May 13th. Yeah, so it's a week old. It's supposed to be a week old. Comes out once a week. Don't call me no gringo. I always say this, something like when I'm talking to an old Southern boy, he's looking at me. Clearly, I'm not from the South. And I can see the disdain in their eyes. I'm like, hey, man, I'm Canadian. I hate the Yankees just as much as you. And all of a sudden, we're friends again. This is a good way to get bias. Yes, Jay. Faux show. Welcome, right? Jason's getting schooled. It feels good all of a sudden, doesn't it, Jason? All of a sudden you're like, oh my God, I had no idea this information was available. This would make trading so much easier. Yeah, it's awesome though, right? Knowledge is power. Bears went up, bulls went down. Oh my gourd. What do you think happens when the number of when the number of bears, let me write it, okay? When the number of bears goes up and the number of bulls goes down, what do you think happens to price? Up or down? Most people didn't know it until they knew. Yeah. You have to, I've taught the COT data maybe 100 times, right? And they're on 100 different YouTube videos. Some are within the daily analysis, some are dedicated to this, right? It's just amazing. In fact, I made this tool and put it up on the website and everything for everybody. It's all there. Price goes down, right? Everyone's saying down, down, down. Cool. So let's take a look at actually what happened. So I'll clear this. Beep. And I'll do arrow, I guess. Okay. All right. So price. This is price here. Dun, 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 dun. Cool, huh? What do you think? Amazing stuff, right? Well, how awesome is it that you now know? So when I started using COT data, I'd have to go to the CFTC website, cftc.gov, I believe. I haven't done it in a long time. cftc.gov. And I still have it here, right? Portal. I thought I saw it. COT, isn't it? Or /COT. Let's just go to the homepage. I haven't done it in so long. Oh yeah, even the colors are different. Commitment of traders. So what I would do is download a spreadsheet. So what do we want? Metals and other, I think it's in there. Segregated, disaggregated. This is how I did it. Can you imagine? Now there's a spreadsheet you can download, but you get the idea. And you're like, okay, Canadian dollar. Clear. This is what I had to do back in the day. You guys have it so easy. All right, Canadian dollar. All right. And then you're like, well, intermediate dealers, asset manager, leverage funds, other reportable shorts, non-reportable. Which one? Right? And you go through all of this. You're like, the volume. Right? So long, short, long. So let's clear this out. So much more difficult, huh? Long, CAD dollar, short. Long, short. What do you think they're doing? Long, short. Long, right? So you have to find out, all right, so there's speculators and then there's hedgers. But then you have to look at total volume. Look at, there's only 12. It's amazing, right? It's amazing, isn't it? That there's only 12 dealers long and no one short. It's amazing, right? But anyways, you have to look at who's who and what are they doing and what's their intent. So these guys are hedging, and what are these guys doing, and they're leveraged short, and why are these guys long, and yada, yada, yada. So the report that Forex.Today offers you, it looks at all of that data and it simplifies. First of all, it puts it graphically, but then it says, we're not interested in hedgers. We don't care about what hedgers are, right? We want to know speculators. So the way that that's done is the government taxes hedgers differently than speculators. Speculators pay higher taxes because they're in the market to make money, where a hedger is just in the market to not lose money, to lock in a future price today. So they're like, okay, they're in the market, but they're not trying to make money. All right. So anyways, we will tax them differently, because if they're making money in the futures market, it's because they're losing money somewhere else. So we'll just, right. So anyways, so bona fide hedgers get a classification of bona fide hedger by, letting the government know, so to speak. So we can take them out of our report. We're not interested in hedging. We want to know if they're in the market, if they're in it to win it kind of stuff. What are they doing? Okay. So then you look at the other guys, they're large institutional investors, so they're required to report because their positions are so large, right? If you got $1 billion in the market, you're going to have to report. So we look at those guys, but then you look at the total volume, subtract the large institutional speculators and subtract the large institutional hedgers, and there's leftovers. Those leftovers are retail traders like you and me. So now we can figure out where the smart money is going, where the dumb money is going. Okay? And that's what all of this is. And we even get rid of the dumb money. This is large institutional, right? They're so large they're required by law to report their positions to the CFTC on a weekly basis. Okay? So this is simply large institutional investors in the market buying and selling Aussie dollar with the intent of making money. Okay? So we added some new selling positions over the last few weeks and reduced our buying positions. And this right here is price. And the black line, by the way, is net. It adds up the long positions, adds up the short positions, and here's the zero line. So now if all you do is look at this black line, you'll see since January, it's become more and more and more bearish. Even, right? Number of sellers, number of buyers. There's more buyers since January. They've just been losing money. And there's more sellers, a few more buyers. What do you think is going to happen, guys, if these guys decide to get out of the market? Do they just get out, or do they join the bearish team? Originally, yeah, I would imagine yen pairs in that case with Shanghai was up overnight. So anyways, if these bulls become bears, look how steep this is. It could even be steeper. So that's how you use this, okay, guys? That's how you use this. If those bulls give up and they leave the market or even join the market as a bear, switch teams, Aussie's coming down hard. Okay, so that's your commitment to traders report. You're welcome. I got room for one more. We didn't get very far today, but we did COT, I guess. So. A couple of things I want to point to is why is that? In the right one? That's weird. I don't remember switching out of oil. Told me in the morning she don't feel the same about us in her clothes. All right. Neutral. Neutral is stable though, isn't it? Try Forex.Today. At the top it says what? COT data. Click that button. I'll remind you, you're at the Forex.Today YouTube channel. So go to the Forex.Today website. Well, you know, yeah, Highlander, no problem, Mickey. I figured you knew all that stuff, though, honestly. That should be in your repertoire, so maybe it was a good opportunity to sharpen the saw. Never hurts, right? But I think you knew it, and you were teeing it up for everybody else, which is really good of you. So thank you, Mickey. So neutral zone, right? So I look at this, you know, as a swing trader. Let's say as a weekly swing trader. I guess I should put the time frame on it, right? As a weekly swing trader, it doesn't look that good. It wasn't quite the right price for a sell. It wasn't quite the right price for a buy. So WTI, Jason, I'm looking at this and it doesn't really predict anything, is what I'm saying. So let's maybe mark this up a little bit. If I was a bull, I'd want something like I would treat this as a double bottom, and then I'd need a higher high, and if I did that, then I would treat this as a bottom. Okay, and I feel like I'm really stretching to get that. It doesn't look like perfect pivots. It doesn't look like a much higher high. Like, let's change colors though. Okay, I mean, I'd rather have it clearly high, and then like this, right? And so we didn't quite get that. Look at last week though. It was a late game, huh? But check that out. M2 to M4 perfectly. So I guess you could be aggressive, but really you wanted to buy it down here or down here. Like it didn't quite, it's not, I know I'm being nitpicky here. It's not perfect. And very often it is perfect. It was perfect here and it was perfect there. This isn't perfect. And then I start going and I start digging in like, why isn't it perfect? Then I say, well, this looks like a top, so I have to mark that as resistance. And this looks like a bottom area, so I got to mark that as support. And it kind of looks like we're in the middle. And then I start saying, well, what are these lines? Oh, well, this is an R1. This is an S1. So if you're trading a range, you can buy it low or you can sell it high. What do I do in the middle? Nothing. Okay? It's not that good. You could do it. It's just not a good trade. I mean, you could do it and you might even make money. It's still not a good trade. That's all. That's all I'm trying to say. You can talk yourself into this as a bull or a bear, and you would agree with yourself, and you'd have enough information to justify it. I'm not looking for information to justify it. That's the difference. I look at it, and it's a very mediocre trade. You will find the justification for it. You will say things like, if you're a bear, you will say, this is definitely a top. This was last week's top. This is more M3 R1 area, so it's going to come down and all this stuff. And you'll be able to justify it. You'll find the price action, and it'll all come together just well. And a bull will be able to do the same sort of things. Okay? And it'll all just be fine. You will find enough. You'll find what you're looking for. It's called confirmation bias. But at the end of the day, it's a great strategy, great tactics with a flawed strategy. Okay? That's all. So I look at it like, I will wait. I'll just wait. I'll catch something, I don't know. Like, for example, and I'm being nitpicky. If it bounced off of here or here, I would treat this completely different. Completely differently. It's a completely different beast if it did this. I'd do that all day, every day. But it didn't do that. So, like, should I drop into daily pivots and see if I can find something? No! Because God forbid I'm going to find something that'll put me into a trade. I don't want that trade. I want the for sure easy money. Okay? Bing, bing. Bing, bing, bing. Yeah, I like that. I don't do mediocre. Yeah, well, that's how it goes. You know, we have very stern conversations in my family. Sometimes yelling can be involved, and sometimes crying is involved. When a bee comes home from school. And I'm not just talking about my children, I'm even talking about myself. We get very, very upset. I do not accept mediocrity. There's too much of it in the world as is. We don't need to contribute. Right? And so trading doesn't pay mediocre traders. Who makes money in Forex? Just think of it. You have to be in the top 5% to make great money, right? Are those top 5% mediocre? Should I freak out about a B plus? Yes. Batman, are you pissing me off? Oh, I hope you mean in your trading. No. But it's just unacceptable. It's not that I'm mad. I generally don't get mad. I can get pissy. Right? But I tend not to get mad. Right? Hey, Spark. But just the idea that a B plus is totally unacceptable. And if you don't believe me, try it in Forex. Mediocrity doesn't do well in Forex. It just doesn't. So why would life actually be that way? Do you know lots of like, well, I shouldn't ask that question because the answer is probably true. I was going to say lots of successful mediocre people. Well, some people, yeah, I don't know. The law of averages, you'll find something for everything. But anyways, I'm just saying you need to strive hard. Mediocrity is not something I strive for. Right? I was freaking out about something and I felt really blue the other day about my grades and stuff like that. And so with someone in my cohort, they're like, dude, you did so much and you're so upset. Like, why? This is from a successful person, right? Like, why do you try that hard? Like, you put more effort into these classes than really what's necessary. I said, I know I'm ridiculous that way. And he's like, but you're very upset. Like, why? Well, I'm trying to get an A. Like, in every class, in every paper, on every test, on every homework, I'm trying for 100%. And when I fail, it's a failure. Like, I can't believe I didn't get it. Like, holy, and then sometimes I got to fight with professors. Like, this is bullshit and that's bullshit. Like, how can if I didn't get an A, someone else must have screwed up, right? Like, I don't know. It's like, it's serious. This is serious. One of the worst things, one thing that drives me nuts in life is I'm like, hey, where do you want to go? I don't care. I care about everything. I care about everything. Yeah. Like on the future, yeah. Why? Honor roll. Absolutely. But can we do yen? We've run out of time, guys. We're going to have to do some yen pairs tomorrow, but I'll do one more, okay? But yeah, the point of trading. By the way, I drew all this out by hand for you guys. You remember this last week? We were still way over here. I drew the double bottom, then the higher high, then the higher low. This was last week. Maybe I did this for the swing trading group. I can't remember. But then here's the buy entry off that particular pivot, and then it's going to go up, and it's going to hit like easy, right? But anyways, I think life, I think the markets, I think Forex, I think everything requires absolute 100% dedication, right? 100% focus, 100% commitment. And that, in that case, if you really did want the yellow Lamborghini, that is so easy. $2,000 a month, you can have a yellow Lamborghini. Or what is it? $3,000. $3,000 a month. You could totally do it if that's important to you. This is so easy to do that. But the people that are generally focused on doing it aren't capable. Why? Because they're weak. You know what I mean? The weak. They don't have the commitment. They don't have the dedication. They're not willing to make the sacrifice. They're looking to get rich quick, which means they don't have a work ethic. What the hell is get rich quick? What the hell is that? It's such a pipe dream. And so childish. It's strange to me. It's from a foreign planet, because where I grew up, you worked your ass off and you kept your mouth shut. You never complained. If you were attacked by a bear, you wouldn't go to the hospital. Oh, it's fine. It's cool. It's not as bad as it looks. Yeah. Well, the funny thing is, Brawl Stars didn't quite say it quite right, but really, once you have money, and I've gone in long conversations about this, so I'm not going to do it, but you really should take your money and buy income. Oh, is this what I did yesterday, Barry? Yeah, like what? Yeah. So all you guys seem to understand, but yeah, 100% commitment. Yeah, I remember yelling at my "I love Forex" sign yesterday, right? I mean, I'm 100% committed. Do you understand? Like, not only is that hanging in a frame that cost me like $300. I mean, I'm serious about it. It's not the money. It's like this is such a precious thing. I want it in a chalice of whatever. It's a big deal. I treat it with respect, right? But it's actually a real license plate that was on my car. Like, I've been carrying that thing around with me for 20 years. I'm committed. I'm ridiculous, right? When a fellow successful person in my cohort says, "Why do I try so hard? Why do I overdo everything?" It's because I'm ridiculous. I'm an absolute ridiculous person, but no one would call me mediocre. No one in their right mind would call me average. And now I'm talking about myself, but I'm talking about us. I want you there. I want you to be ridiculous. A sickening, ridiculous work ethic with a long-term focus. The rest is just time. The rest is just time. Whatever you want, whatever you need. And you know what? The most important thing is freedom. How many people have freedom as a major goal of their Forex trading? Maybe even more so than money. Let's say I had a regular job. I'm a bank teller. I don't know. I don't know what people do. Often I look at people, I'm like, what does that guy do? Okay, I have a job. I go there 9 to 5. Two questions come to mind. Do I have the time to go to Harvard? And can I afford it? I have children too, and a wife. Like, can I be a parent, a husband, a full-time employee, and a full-time student? Because technically I'm a full-time student. And do I have that kind of disposable income? I guess employers pay for it, right? I forgot about that. But I'm like, dude, seriously, like, Forex is so amazing. Right off the bat, once you find success, first of all, you're going to go through a period of addiction. You're going to overtrade. You're going to wear yourself thin. You're going to go through the same metamorphosis I've done. But one day you're going to look like me. You're going to have lots of gray hair. Your eyes are going to be shot. You're going to have carpal tunnel syndrome from playing with your mouse all day. I said mouse, by the way. Right? And you'll say, I have so much time. Now, I've been bitching and complaining I never have time, but it's because I never stop pushing forward. I keep trying to learn. I keep wanting more. I want to get smarter. I want to get stronger, so to speak. But Forex is freedom, right? Forex is freedom. You could literally do it in a couple of hours a week. So if you have a full-time job now and you're like, how can I possibly do this with a full-time job? Swing trade. You can get by even, let's say, an hour a day. See, an hour a day, I would start looking for weekly swing trades on Thursday, and you probably won't get them most Thursdays, but you'll see it coming. And then you'll either take the trade on a Friday or you'll take the trade on a Sunday, Monday, whatever. So now you're stretching out there like 3 to 5 hours a week. You could do this. What age did I start? I was a venture capitalist, and then I was a successful entrepreneur. So when I was your age at 19, no, wait, I was 20 or 21. I ran a company of 3,000 people. when I was, I was 21. I might have even been 22. I shouldn't exaggerate. I was probably 22. I managed, well, I was on the board of directors. I managed the entire Western United States. Now we had 27 offices nationwide. I had 1, 2, 3, 4, 5, 6. I think I had 12 offices that I directly oversee and managed a staff of 5 or 6 people. Anyways, that's what I was doing when I was 22, let's say. So you got time, man. Now, if I had channeled all that energy, like for example, at that time, right, I was on the board of directors with George Soros. If he had said, son, he speaks with a French accent, Swiss, German, French, whatever. I almost wish he said, hey, man, get into Forex. I'm like, can I work at the Quantum Fund with you? But boy, that would have changed my life, right? The very first board meeting was on Wall Street. Like, oh my God, if he'd only said, throw yourself at Forex. But I was busy managing 3,000 people, so I don't know. Very interesting. So you have quite an advantage to start at a young age if you have the maturity. Okay, some people got it, some people don't. And then on top of that, if you're going to fight. Right? I'll give you an example on my phone here. I'm trying to land a client. I've messaged him. I'd have to add it up. I bet you 40 times without a response. You can't see it, obviously. 40 times without a response. Until earlier in this webinar, and he's like, Wayne, thanks for hanging in there, man. You're amazing. I'm like, I know, right? You have to be 100% committed. You have to be ridiculous, right? You have to be patient. You have to be disciplined. You have to be focused. You have to be committed. And you have to have a ridiculous, sickening work ethic, 10 times more ridiculous than anybody else that thinks they're a player. Magnitudes better. But then the world opens up and you're like, oh my God, you're a frog out of the well. And you look around and you're like, look at this beautiful, amazing world. But you got to climb out of the well, the one that you're trapped inside of. Oh my God, 40K is great, man. 40K is fantastic. Even if it's ZAR, 40,000 Rand is a good start, man. But before you put that real money to work, Brawl, I'll do one more, guys. But before you put that hard money to work, start thinking about learning how to run a business and thinking like a business person and planning like a business person, both, written strategy type plans, but also sort of learn the math of finance. Like, don't screw this up is what I'm trying to say. Imagine you're going to business school at Harvard and you're going to, for the next 2 years, you're going to put 16 hours a day into learning how to run a business. That's what Harvard Business School is. Okay. I'm going to spend from June 20th to July 15th with the guy that runs the PhD program at Harvard Business School. He's teaching a special class for my cohort of 10 people. All right. Put yourself in that situation. You're at Harvard Business School. You're going to learn business for the next 2 years. Learning technical analysis is part of it, but running a small business is what's going to make you very, very, very successful. the trading of currencies is simply the thing that your business does to generate income and wealth. But you can apply the business common sense and hard work and ethic and attitude to anything that you do in your life. Okay? This just happens to be the best thing you can do commercially. No accounts receivable, no accounts payable, instant gratification. The financing terms are amazing. Hey, for every $1, do you want $100? How about $200? Well, I live in the United States. Okay, $50 for every $1 you have. Like, think of it that way. It's like an investor. The investor says, hey, man, I'm willing to invest into you. So right, but you got to have skin in the game. So for every $1 you put in, I will put in 50. Holy crap. Really? Holy crap, seriously? Like, wow. You'll earn, appreciation on your investments as the value of the currencies you buy goes up, but you'll also earn interest if you do it right. You'll earn 300%, 400%, 500% a year on interest. Like, it's so good. It's so unbelievable. It's so good. It's so unbelievable. I wish you the best of luck. If you're starting out and you're 19, you will become a billionaire. Or, like most people, just totally ignore me and screw it up and throw away the opportunity. And I don't know. You'll find something. You'll find a niche. All right, we'll do one more. I got a lot of requests for me to do Beast, so why don't we do Beast? Okay. I thought I pulled Beast apart a lot 2, 3, 4 days ago. So we have this coming down, fib retracement, fib extension into the channel, creating a reversal. Okay. Now, the thing with this channel, what's the probability of it going back to the center to the median? Okay, this is actually, it's not median. Sorry, mean. Did I say median? Mean. I'm really sorry. Up, 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 down, down. Okay. So yeah, this is the question I can't answer for you. Is it going back to this line? Is it going back to that line? That has to do with your bias. So I talked a lot today about, the trend. Okay. This is, under these circumstances, the most likely. Is it possible it does this or some form of that? It could be, let's say, this. Same thing, right? Yeah, that's totally possible. So you need to do that here or here. Now, lastly, we're looking at a daily. Okay? So now what could we do? Well, this is your short-term long idea. So even if bears want to sell it, bears want to sell it high. So there could be a short-term long, but long-term short. And when that happens, it always makes bears vulnerable to the short-term long becoming a long-term long. Okay, that really comes down to how they behave, obviously. So right now, this looks predominantly down. In fact, we don't even have to make that judgment call. The beautiful thing about this tool is it's measuring essentially standard deviation from the mean. Okay. So all you have to do is start wherever you want to start and drag. I'm dragging it sideways. If you look at my mouse, I'm dragging it sideways even though it drops down. So it's telling you it has been in the past more bearish than bullish. So it seems to me, even though every trend reverses at some point, right? Trends tend to want to continue. So how do you treat this short-term long to long-term short idea? Well, if we go into a smaller time frame, you should already be able to see this, but I'll just highlight it here first. This predicts that. Okay. Now check this out. Okay, we know this area and we know this area. Okay, those are the two sell zones. If you're a bear, you should be able to see that. That's hardcore in your face resistance based on price. Then there's resistance here and here based on price action, based on pivot points, based on a few other things. So that sets up a up, 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 down, down, or an up, 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 down, down if you're a bear. Each one of these, if you're a bull, presents an opportunity as well. Double bottom next week, right? We're up even the following. And there's the projected high from June. The way I always remember June, and of course every June is different, and I don't know why I remember it this way, but I always think of it, and I'm trying to tell you, even though I think of it this way, it's probably not true. But that being said, I always think of June producing a high. I don't know why it's always a high. I'd have to go back. Honestly, it's just an image, and I'm not even talking pound yen. I'm thinking markets. So this could be like the S&P 500. It goes high, and then by the third week, we fizzle out. Okay, so that's what I got in the back of my mind. Okay, so thanks for hanging with me, guys. Please subscribe, please like, please comment, please subscribe, please like, please comment, please bring a friend. There's 4,000 other videos on YouTube. Someone asked about Mexican peso. There's a video here on how to trade the Mexican peso and why it works. We're going to do that trade next week. And remember, visit tradersway.com, open an account, download MT4, and my chart templates are in the video description below. Thank you for the loyalty and respect you show me every day, and I will see you tomorrow, 7:30 a.m. New York time. Peace on earth. May the pips be with you. May your profits be above average.